Well, hello everyone. Kay Kim here from the Traders Club, and thank you for tuning in. Thank you for attending the live midweek update tonight. And if you're watching the recording, thank you for tuning in. I think it's been a while. It's been about a month or so since last time we did a live midweek update. I think I did post a video last Wednesday though. So I'm sure you guys watched that. So well, today we're not going to spend too much time looking at the market. Well, I'm trying to be as succinct as I can be, and we'll look through a couple stocks, and I thought if you had any questions about anything, you feel free to ask me any questions regarding any stocks you might be watching or you might be involved in, or any technical matters. If you had any questions regarding technical analysis, I hope to answer that question. So today is going to be kind of very freestyle, kind of relaxed, kind of casual setting, if you will. I mean, I think we're always being casual, right? So, we'll do that. So we'll look at the market, we'll look at a couple stocks, and again, feel free to ask any questions as we go, and then I'll try to go through these indices pretty quickly, and then again, we'll do a few stocks, and then we'll take I'll take your questions, and see if you have any questions about anything else. So hope you guys had a good week. Let me just share a chart here with you guys for the live attendance. Let's see here. Okay. Here you go. All right, so you're seeing S&P 500 here, spider, daily chart, and it's almost like the market's been grinding higher, and the market, it's gonna do what it's gonna do, which is minor term fluctuations, minor term volatility. And it's going to, one of the thing about, psychologically speaking, one of the thing about the market is that this market is never gonna make it easy for anyone, right? And so even though it clears certain level, this is a level that I was looking at, and even though it clears certain level, it's not guaranteed it's gonna go continue higher like that. Even last time, if you remember back in February, looked like it gapped up, and then you can see that during the day, this was during the trading day, bulls made a run for it. Remember, you can see that wick here, bulls made a run for it. We went up, and then it pulled back. We gapped down next day, and then we held up a little bit, and then finally it kind of had that move to the upside there, and something similar back here as well. This was back in last year, actually. This is actually very, very interesting to know. Back in May, right, 2014, April and May, this is what was happening 2014 April and May. It's interesting what's happening today, 2015 April and May is coming up here pretty shortly, right? So I'll give you a quick trick. Like, okay, so if you want to understand the sentiment, right, like the sentiment of what's happening right now, right, this is a quick, this is a trick that you can do, is that, well, I kind of want to understand what's really happening here. I'm not sure, is this going to be a major double top? Or, to be honest, this is not a double top, guys, just to let you know. There's always people calling things. This is not a double top. If anything, this is a double bottom. It's not a double top. Double top does not form in this way. Usually double top forms more of a symmetrical, like this is a double top. That's more symmetrical. Went up, came down, went up, came down. It was a double top later that turned into potential head and shoulder, then never confirmed, and then continued higher. So this isn't a double top. Just technically speaking, that's not it doesn't have a characteristics of a double top. But anyway, so if you want to understand, where the market is at right now, and you kind of want to get a little bit of like feel to it, like what does that mean, you know, psychologically, technically, what kind of sentiment does it carry? What you can do is, you know, you can kind of go back and research the past historical price action that has a similar sentiment, right? And what you can do is you can kind of ascertain, you can able to kind of figure out certain characteristic or psychological level of investors and traders at that point. So if I look at this here, I think, though it's not exactly the same, I believe this price action right here is pretty similar to this price action. I think I mentioned something like this back in, you know, several videos ago, in my opinion. So it's very, very similar in my opinion as far as the sentiment is concerned. You know, you can see that how, you know, we kind of had that pretty, you know, we had that kind of a double top-ish pattern there. We initially broke down, kind of we went back up here, and then the buyers are trying to make new all-time highs, and then you can see that, you know, that little, you know, bulls made a run for it, right? You can see that, and after that it clears, after it clearing that recent resistance down here, right there. So you can see this is a recent, you know, resistance here, right? And then bulls are trying to make a run for it. Several days back, actually, if I kind of zoom in here, you can see we actually gapped up. You see that? We gapped above that resistance level there, trying to make a run for it, and then we, you know, got it sold off, and then, you know, it sold off pretty quickly in the morning yesterday, and then it brought it back up this morning. Lost all of its gain from yesterday. We gapped down yet again. So when we go back right here, this was back in 2014 April and May. I know that, you know, the price doesn't look exactly, or it doesn't look very, very similar to today's action, but just what the buyer's trying to do at this point is pretty similar. What the buyer's trying to do, right? So if we just go back here, let's say if you are somewhere here, let's just say that, right? And let's say this is today. This was back in, you know, May, you know, 2014, May, middle of May. And we kind of have resistance going on here, right? So the sentiment here at this point and sentiment today is very, very similar. Just the way everyone's feeling about the market. You know what I mean? The market is trying to go to make a new all-time high. Market, you know, gotten above the recent resistance here and here. A market did gap back above 50 MA, but market is getting, you know, hitting that real resistance level. So what does this mean? Right? Let me go back here. Is that what's happening right now? Yeah, right? The market is trying to make new all-time high. Market did break above, we're talking S&P 500 here, break above the resistance and pull back. What does that mean? Isn't that pretty similar to what was happening precisely last year, this time last year? So, I mean, if you kind of want to understand, you know, what's happening today, you can always kind of go back and kind of find similar, you know, price sentiment, and then kind of get a good idea. Does it mean that it's 100% that because last year we did this, about 2 months of bullish run, we're gonna do that 100% guaranteed? No, that's not what it means. What it means is if you don't understand what's happening here, you can always kind of go back and understand it. Obviously, you know, this market is never gonna make it easy for anyone, right? I mean, like we have a one-day sell-off like 3 days ago, and then everybody's freaking out. Like, you know, people are freaking out here, 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 people are freaking out here. You know, I can't trade the market like that. You can't even live your life like that. I can't even. I mean, obviously, something that I've been talking about here at the club is that we all have problems in our lives, don't we not? Right? There's certain things go bad, like you have a bad hair day. You know, you had a your boss was mean to you, or you know, you didn't get your promotion or whatever. You know what I'm saying? Like your checkup bounced, or you know, you lost the client, things like that. But I mean, that's kind of what the market does. Every day there's certain uncertainty. Every day there's certain fear that market brings to the investors and traders, and then so that there's certain, you know, reaction from it. But again, we have to understand that that's what's going to happen. But if we can able to focus on the intermediate and the primary, because in the minor term, it's gonna do what it's gonna do. But in the intermediate term, obviously, we not in the vicinity of a higher low? Yes, we are, right? That low is lower than that low, and this low is lower than this low, which means it's higher low. This high is lower than this high. This high is higher than this high, and this high is higher than that. So we're in the vicinity of a higher low and higher high, which means trend is up in the intermediate term. Obviously, primary term, we don't even have to talk about that. No sound is back. Okay, so maybe if you just joining in, sometimes it takes a little bit to get the sound. But anyway, so what are we? Are we in an uptrend? Yes, we're in an uptrend in the intermediate term and primary term. Are we in an uptrend in the minor term? Again, everybody has a different interpretation. What minor, intermediate, primary is. You've been following me long enough. You know what I mean. In the minor term, are we in an uptrend? Yes, we are. We are in an uptrend in the minor term. Just go to line chart here. Focus here. Don't look at other stuff. Don't look at other stuff. That's the intermediate stuff. This is a minor term, right? That might be like intermediate term, even primary term for day traders. That's a minor term. You know, if you're position trading, that's a minor term. Even if you're, you know, holding positions a couple years, or that's a minor term. So what do we have? High, higher high, higher high, low, higher low. We have not yet cultivated higher low, but are we in the vicinity of higher low? Yes, we are. As long as we're above this low, we are in an vicinity of higher low. So even if this thing comes all the way down here and then bounces back up, that is still considered as a higher low. And this market in the minor term is going to continue to do that. And it's many times many people have a trouble, coming out of day trading mentality and becoming more of a longer term trader, is because they can't stand this. They can't stand going through this. You know what I mean? But that's like that in life, guys. That's like that with everything. Some people are greater than others because some people have patience and they work through stuff. And some people just can't work through which other people look at it as a minor term problems. Market and life, it is inextricably tied. You understand life, you understand the market. So looking at this here, we are in the minor term uptrend because we are continuing to cultivate higher lows and higher highs in the minor term. So I'm wondering though, if we actually go to a line chart, sometimes line chart can give us the clear sentiment here. Sometimes, you want to look at both candles, and I usually look at candles the most, but line chart kind of helps us. Where is it? You can see this is a line chart resistance. A lot of times, many traders and investors, they tend to remember the end of day price rather than the intraday price. That's why what the line chart is only consists of closing prices. You know, a lot of times because many traders invest I mean, even myself, we don't look at the market all day long. We just look at it and say, what do we close today? So that's kind of why they remember. It tends to be they remember the you know, closing price rather than the intraday lows, intraday highs. Well, candlesticks give us the, you know, the action of all throughout the day, but lines only give us the, you know, the closing price. So you can see without all the wicks from the candles, you can see that we're just right at that old resistance pivot, potential pivot. You know, it's interesting to note that last time we kind of did a similar here. This was a resistance, and then now that became support. So there is a possibility that we may find support here, maybe next few days or so. We still have 2 more days of trading here, so we may. I'm not sure if it's going to. But let's say if we bounce from this level and then continue higher, then perhaps this was that higher low that we're looking for. Because in the minor term, we have a higher highs, we have a higher lows, but we have not gotten that higher low, another higher low yet. But we're in an uptrend, minor term uptrend, right? Even if we lose this level, I wouldn't freak out because any vicinity above this level is a territory of higher low. We also have some kind of support potentially coming right about here or so. So I mean, we could even come back down, maybe hit that 50 MA and then get up. Right? We still have that uptrend support there. Right here. Right? If you actually draw it to the line chart, it will hit this candle. It would hit this wick there. If you actually draw it from the line chart here, I'll show you. Go to line chart. If I actually draw this like that and then flip it over, you see that we hit that. We hit all these levels right here. And there's no fixed rule of, well, okay, should we use line chart for drawing uptrends or candle wicks? It depends on it depends on the situation. There's never a fixed rule when it comes to trading. What has worked the most in the past is gonna continue to work in the near future. Doesn't mean it's 100% guaranteed. And you know, things can change. So there are times where I would use line chart more than candles, but this time, I'm using candles to accommodate some of these wicks right here. Though we didn't hit that, but again, you can't be too obsessive with every little detail. That's what people kind of does, is they just, you get slightly below the support, you get slightly below 100 SMA, oh my god, that's a selling, that's a sell signal. That's not how this market works. So S&P 500, looking at here, minor term, intermediate term, primary term, I say bullish. And because, we do have a bearish engulfing pattern, and you see, so this is what's another thing happening. That's a bearish engulfing, yes, and with that we did see certain weakness, but is that bearish engulfing has so much power that's going to bring the whole thing down? Again, it could happen, anything goes. However, that alone is not enough to bring this whole thing down, in my opinion, especially when we're still in a minor term uptrend. And so I would say this way, in a minor term, we're neutral to bullish. I don't want to say bearish yet, because we're still cultivating higher lows and higher highs. And you guys probably saw my recent article, bulls declaring victory yet again after we gotten back above this level. Why do you think I wrote an article there on that day instead of back down here? Because this was when we created a minor term higher high. But let's say if this thing continued lower, then we have a problem, right? If this thing were to continue lower and broke below that level, then we have potentially lower highs, lower lows, and that could have been a problem. So I was watching to see if we can get above the resistance level. Because if we so let's just go back and study it. You can look at this as a kind of a back testing, right? every time when we get above recent resistance or recent lower high, this is a recent resistance. You can call it a recent resistance, prior resistance, or prior lower high. So what happens every time we get above prior resistance? What does stock do? What does S&P 500 do, right? So if you just study that, then you can kind of figure out the probabilities. What could possibly happen here? Doesn't mean it's 100% guaranteed. No, it means there's a good probability. So let's say here, right? We got above that. I mean, we're pulling back, but essentially we got above it. Same thing happened here. This is a prior resistance, prior lower high. We got above it, and then, you know, we had about a, week and a half run. It wasn't a lot, but what it did was it created a higher high, and we got into another consolidation. So that's a positive, right? Let's do another one. Prior resistance, prior lower high. We got above it. We pulled back because it's going to make sure those short-term day traders and, people who get into market because of emotion, feelings, they're impulses. They just look like, oh my, this is, it's no brainer. We're going to make new highs. And then they got in here and then they got stopped out. And then, market loves to do that. Market loves to stop you out and then move without you. But if you look at it, yes, we got above the resistance and then we held above for a little bit, pulled back, and then what? That was a pretty good run. Came down though, but there's a higher low. You see, we didn't cultivate lower low. We went up, pulled back, we created higher low there. Not a similar. We don't see similar action there after that. You can look at this as a prior resistance or prior lower high. We got above that, and then you see how this market does? You mean, what it does is, this is to shake those technical traders out, the newbies. The technical traders that are not seasoned, the technical traders, they're just starting to understand. Like I always say, technical trading is very easy to pick up, but it's very, very difficult to master. And I don't just say that because I want to make myself look like a master. That's not what I'm saying at all. Why? The reason I say that is because my first 3 years in technical trading, I mastered everything as far as candlesticks, support, patterns. I memorized everything. And I still couldn't make money. I kept losing. That's why I'm saying that. But anyway, so, you could look at this, recent resistance, recent lower high. We got above it. That was a confirmation of some sort of a higher high in the minor term. And then we pull back. But are we still in the vicinity of a higher low? Yes, we did. And then it went up. Everybody got stopped out here. And then when everybody's like, oh my God, I'm sick and tired of this, finally I gotta buy signal there above the resistance level, and finally I went long, buy some calls. My stop was just below that 50 MA, and then it stopped me out, and the next day it had a huge gap up. It's too late for me to jump in, and then this thing keeps going higher, and then finally I enter because I just felt bad about myself because I lost, I couldn't ride the whole move. And then it pulls, and then we get a sharp pullback, and then you close your positions out, and then it goes back up. How many times you been in this scenario? You gotta love this market. How this market does that time and time out. Yeah, so I don't know if I can find any other resistance. And it's similar here. You can see the recent resistance. We got above it, and then pulls back. Oh my goodness, why? And then stops everybody out and goes back, pulls back again, and then the market moves just like this. When everybody's tired of it, when everybody's just sick and tired of this, they oh my God, like every time I try to go along, it just, why? And then, it's our humanistic of, trying to rationalize certain things. Like, well, it should happen this way because of this. market is extended, so you should have a crash. So once we're fixed in that idea, you know what I mean, it's just you ignore everything else. So what I always say is, if you understand the price action is the king, and the price action says something, then you respect the price action, right? So what do we have to do today? We respect price action in the minor term. We respect price action in the intermediate term. We respect price action in the primary, right? This is a primary. So as of today, I stay bullish. I hope you guys stay bullish as well. Stay calm. Oh, there's a funny one. There's this kind of funny. This was funny. Keep calm and be bullish. That's what I would say today. Keep calm and be bullish, because we don't have any topping pattern there. I always say I was gonna make this short, but it already gone 25 minutes here. Let me go through, look at other ones. So you know what I'm looking for is this. What I'm looking for is I don't really care at this point. It's gonna bounce here or it's gonna come down a little bit lower. You know, what I'm looking for is in the intermediate term, I want to make sure this thing stays above 204. Okay, in the intermediate term, right? 204. You're a position trader. You don't worry about this thing. Who cares what's going to happen tomorrow? Who cares what's going to happen next week? As long as we stay above 204 as a position trader, if you're a position trader like myself, you do not care. Do whatever he wants to do here, right? So as long as in the intermediate term stays above 204, we're good. We're still bullish. In minor term, well, you want to stay above that 50 MA, the daily 50 MA in the minor term. If we can do that, then you know, we're bullish in the neutral to bullish. If we start to get back below this level, below 50, about 207, you know, 207.50, 207.50, 60-ish. If we get below that, minor term bearish. But at that point, you want to look for that 100 SMA there. But if we bounce either here or here or here, any of those levels, it's bullish. And I can't tell you which one, but I have a feeling that, you know, we have a high probability that it is going to bounce. And even look at these candles right there. You can see that how, you know, bears are coming and trying to take this thing down, and then the buyers are just kind of absorbing it, kind of slowing things down. Right? Do you see that they're slowing it down? So that's the beauty of candles. Candles give you story. You know, give you story of what's happening. Let me look through NASDAQ here real quick, look at Russell and stuff. So NASDAQ at the same time, we got above here resistance, got above here resistance. You know, and then we kind of getting back up to all resistance and support level, potentially a bull flag. I'm not sure at this point, but are we bullish in the minor term? Yes, higher high, higher low in the minor term. In the intermediate term, as long as this thing above 105, 104, you don't even have to worry about this. I've been long on NASDAQ since here. I've been holding it ever since, and yeah, I don't. 3 days of pullback, yeah, that doesn't really bother me. And bullish, right? Russell 2000. I actually kind of thought that this kind of action end might happen on the Russell, because you know we see a lot of these grinding work, and a lot of times these grinding moves are, you know, you're prone to see some sharp pullback when you see a grinding work like that. You know, like you just grinding, but then it's going higher. But so what you have to do when you look at a Russell, you really can't try to forecast this in the minor term. You really want to trade, but you really want to look at the Russell as your major key index, which I've been telling you to. You cannot really look at a minor. You really have to look at a more of an intermediate term. So intermediate term, what we have to look at is, you know, obviously we're in an uptrend here. I mean, again, don't be obsessive because we just closed below the support. Oh my God, okay, this is bearish, it's gonna do that. No, that's, you know, a lot of, you know, you can see that we broke that resistance, didn't do that. We broke this support right here, didn't do that. You know, so just because we slightly broke below support, it does not give you right to start short selling this, thinking that it's just going to completely roll over. It's going to take so much more then crashing or dismantle Russell. Even this 1 year of cultivation of major topping pattern, left shoulder, double heads, right shoulder. You don't see any kind of monstrous head and shoulders ever in your life. This is it. You're not gonna get any. This is basically like head and shoulders with the double top on top of it, right? So we got shoulders with double. It's like a monster head and shoulders, right? And not only that, we had a confirmation. Oh, initial confirmation. We didn't have a full confirmation. What's a full confirmation? You want to see another lower high and then rolling over. That would have been full confirmation. Russell would have tanked to about 86, 90 or something like that. But at the time, S&P 500, Dow Jones, Nasdaq, other indices were not condoning it. So Russells are all alone, and finally we put an inverted head and shoulder and then nullified it and then continue. So you're telling me just because we broke below support, this thing is going to complete? That's not going to happen. Even this 1 year cultivation from the bears was not able to dismantle this thing. Do you think just because we break below support, all of a sudden, the Russell is gone? You see what we're doing here? You see what everybody's thinking? What people are using technical analysis, kind of almost like abusing it just to accommodate their ignorance, right? So we are in a support or broken support, but let's say if this thing, I'm not saying it's going to break above that. I mean, it could even come down here. We just got to hold intermediate term. What we need to hold is we need to hold this level, the band of support, 180, 120-ish. And I'm not sure if it's going to come all the way down here. If it does, we do have a 200 SMA hovering that level. 100 SMA act as support, 100 SMA support there. So even if this thing comes all the way down, I am still bullish, and I think then we would cultivate higher low, high in the intermediate term anyway. But let's say if this thing finds bounds somewhere here, then you just draw a new support line here, here, and here. You see that? So support line and resistance levels, they're never fixed. You can also adjust them a little bit here and there. Bullish. A minor term though, neutral to bullish, I say. Neutral actually. I can't say bullish yet. Now that we have 10 and 20 kind of crossing back down though, so I can't say neutral now. I can't say bullish. I would have to say a bit bearish to neutral, I think, in a minor term. But we do have the 50 EMA here that has acted as support, so that there's a good chance if the other indices bounce here, we can bounce here. But I think worst case scenario, we might even come back down, to 100 SMA. That still wouldn't worry me. I'm still, still holding my calls that I went long here, that I added it here. So I've been holding it for quite some time here, almost 5 months. I bought leaves. So they are not expiring until end of the year or January, and they're in the money. So I always buy deep in the money leaves, long-term equity anticipation securities. They're options that are 1 year out, and I buy deep in the money. They're expensive options, but those are the ones I like to play with. So I'm still holding it. As far as that is concerned, I'm not worrying about it as long as we stay above this level. So you see, there's a lot of peace trading this way rather than just every single day, looking at the market tick by tick and just trying to pull your hair out every day. I just don't know how people can do that. A lot of respect for those guys who does that. So, financials, despite today's action, kind of held up well here. Financials been lagging. I gotta tell you, yes, the transport's been lagging, the financials been lagging, strength in dollars and all of that stuff. That needs to be, all these signals are potentially problem for the economy. That needs to be substantiated by the price action. And when you look at financials, where are we right now? Obviously, we are in the vicinity of higher low, right? Are we not in the vicinity of higher low? Yes, we are. And you can look at me, okay, is this maybe a lower high? It hasn't been substantiated. It hasn't been confirmed. If this thing gets below this low, then indeed that is lower high and this is a lower low. So it's going to be a while since that gets confirmed as a lower high. I mean, yeah, and you know, you can look at this as a minor term lower high, but intermediate term. So the question is, which way are we going? Right? Which way are we going? So then when you're faced with this kind of situation, always look at, well, where have we been going? The upside, right? So as far as the sentiment is concerned, remember I just showed you how to look at the sentiment. Like, you know, if you kind of want to understand what's happening here, just kind of go back to, you know, old price action and just trying to figure it out a little bit. You know, obviously they're not going to be exactly the same, but you know, we kind of have that and you kind of have this. Where are we going? Right. This was back in, 2014 May. Interesting, right? S&P 500 sentiment is very, very similar to last 2014 May. And financials also, right? Doesn't this look pretty similar to today? So let's say if this was today, this is what I will tell you. We are in the intermediate term higher low territory of higher low. Is this a lower high? We don't know that yet. So we're kind of stuck here and here. Where are we going? Well, I don't know, but we've been going. Where have we been going? Well, we've been going up. So there's a wind blowing to the upside. So there's a little bit more edge for the buyers there while we are cultivating potentially a higher low here. And then what happened? We actually did go up. And that was like a year ago. So we're back here again. Where are we going? I don't know. But because we've been in this primary term uptrend and intermediate term uptrend, I say there's higher probability we go higher. And a lot of times there's a process, you know, before this thing goes higher. There's always a process of something happening, kind of shaking everybody, and then kind of moving when everybody else is kind of not wanting to be part of it, right? Lastly, let's look at New York Stock Exchange because I wrote an article about it. This looks very, very similar. We're pretty similar to, how. I mean, it doesn't look similar to Russell 2000, but the consolidation part, it wasn't textbook consolidation. You know, I mean, what is this? What is that? I really don't know what that is, but it looks more like kind of massive inverted head and shoulder here. Yes, inverted head and shoulder is a reversal, bullish reversal pattern after a downtrend. I know that. What I'm saying is I'm just trying to explain to you that this is cultivating higher lows. That's what I'm saying. So, and then we confirmed. Right, and then we're just heating up here. And this is where a lot of people like to call it bull traps. Let me go to Russell again. This is where a lot of people like to call bull traps. Where are we today? Here. Let me do this. And I remember doing live event. That's where New York Stock Exchange is at right now. That's where New York Stock. This is Russell, but I'm giving you possible scenario. That's Russell. Consolidation, about a year. Inverted head and shoulders. Confirmation. And what is it that we pulls back? Why? Because people are going long here. Uneducated, uninformed. The newbies, the new technical traders. And then they get stopped out. And then it moves without them. New York Stock Exchange, where are we? Right here. So what do you think I'm supposed to say to you guys? You know, what do you think I'm supposed to say to me at this point? That's a bull trap. Yeah. How do you know? I just know. Yeah, that's what it does. Yeah, you know what I mean? Like, it might do that. It might pull back. So then when it pulls back, do we freak out? No. Higher lows. And as long as we stay above certain level, we're in a vicinity higher low. If it pulls, if it gets back above, that's higher low. And I'll tell you know what? I think we have a good probability that you know, I don't want to be arrogant to say, mark my word, you know, let's look at New York Stock Exchange next 4 months, it will be up here, you know, 1150, you know, 11,500. You know, I don't want to be arrogant to say that, because nobody truly knows where the market goes, and this market knows how to humble you when you're proud. So I can't say that it's gonna get there for sure. Mark my word, let's come back in 3-4 months and I'll show you. I can't say that. What I can tell you though is that because we're in an uptrend, because we're in high lows and higher highs, because we have in 1 year of consolidation, because the S&P 500, NASDAQ, and the Russell were in an uptrend, though we have certain, you know, lagging indications like, you know, financials, you know, the transport's been lagging. Yes, even though we have those, but these major indices are showing some good signs, especially seeing 1 year consolidation New York Stock Exchange, and we've been coming out of the consolidation Russell 2000, and because of the market seems to be healthy, and for that reason I believe the market will continue higher, and it has a high probability in the next 3 to 4 months. New York Stock Exchange will be somewhere up here. Does not mean that it's going to go straight up. It could come back down a little bit and then shakes everybody out and then get up there. Hope that makes sense. Any questions? No questions? You guys still listening, right? All right. So, great. I'm glad that you guys are not falling asleep, still listening. So, you know, I try to reason things. I try to, you know, give you, trying to analyze the market and give you forecasts and give you why I feel that way, but at the same time I want to be humble enough to say that this market, anything can happen in this market, and that's the one aspect of this market, is that unthinkable do happen, miracles do happen, you know, so we have to keep that in mind. But you know, unthinkables, the miracles, the probability wise, they don't happen as much. So something that we have to, you know, understand. Can you please review GLD and GDX? Yes, I'll look at gold as well. I'll put it right here. We'll look at it after looking at some of these. I'll go through some of this. And again, today I wanted to do this event to take your questions. J&J, I'll look at J&J as well. So today I wanted to do this event to take your questions, so feel free to ask me any questions. All right. HA. Okay, we'll look at that as well. So let me go through these quickly though. First, Tesla. You know, this is a level that I've been talking about, right? That if we get above this level, that I will consider. I didn't say that I'll go long here at this level. I said I will consider. Are we? When is the earnings? Let me look real quick. May 6th is the earnings after close. So let's just change that and make that to red. So I wouldn't do anything until earnings. So what happened was we are now holding above this pivot. We got a little bit of bull flag there. So what we did is we nullified recent lower high or prior lower high. We still in the vicinity of lower high though, but this is the first, that's the last lower high that it is nullified with this price action. So now you can kind of look at this as a basing period. You see that how we need price to substantiate it first before we can say that this is a potentially a basing period. What we couldn't say is, well, this is a basing period here because we're still in a downtrend, because this thing could have continued lower, you see. But now that we have now that we have nullified this low right here, we can possibly say this is a basing period. I mean, at this point, I still don't think that we should completely be super bullish about it, because we're still kind of in that vicinity because we have this lower highs here. So what I want to see is, at this point, is I want to see intermediate term higher low. This is a higher low, not intermediate. That has a more characteristic of a minor term higher low, because we only pull back a little bit. What I'm saying about intermediate term higher low is this is intermediate. Like these right here, these pullbacks, pretty sizable pullbacks, is intermediate term higher low. So what I want to see, pretty sizable pullbacks like these. Though Tesla can be very, very hyped up, and it can one of those stocks that can just easily just do that, but then then that's not mine. That's not my setup. So what I'd like to see is potentially kind of get up here, possibly in earnings we gap up and then possibly pull back, and then create that high low intermediate term. Then we are cooking something. Then we are intermediate term higher low, higher high, higher low here. You see that? You see? Then we are starting to establish an uptrend. We have not yet established uptrend. If this thing falls back, only thing I can say is this is another lower high, even though it's trying to nullify that you know what I mean. So I think danger is still has to be cautious, but it's starting to look much better than before. And monthly chart looks great. We do have a, this is a monthly pattern here. We do have a monthly bullish engulfing here. Thread is that we still kind of in that bearish divergence pressure. So that's something to be aware of in the long term, primary term. So for that reason, I really need to see kind of more well-established higher low. This isn't gonna do it for me. Let's go to it here. Apple. So I didn't engage in Apple this time. I mean, I'm still holding very marginal now that I closed most of it up here, that I entered back down here, but now I didn't. I wanted to add some more right here once it got above that resistance, but because the earnings were coming up too quickly here, I decided I wasn't going to add. And then we had that earnings beat, was it right? And then it came down, and it came down again today. We're retesting this level, and actually that's what I was actually looking for. Doesn't mean that because I was looking for stuff that it's gonna happen. There are a lot of times I look for stuff and it didn't happen many times. Unless this just had a huge monster gap up and we just had a huge move like that, I would have just say, yeah, I let that go. I'll just close my very marginal position that I'm currently holding. But because I'm pulling back, is I'm waiting to possibly enter here. But there's two ways of doing things at this point. Because there's certain signals, this is a daily with indicator here. You can see that we kind of created that equal high here, right there, right? And let's say if this thing kind of rolls over, I'm not saying it's going to, but let's just say if it does. But that's the problem with very steep bearish divergence. And I don't want you to look at this as, oh my God, that's bearish. Oh my God, this thing is gonna roll over, because we've seen these patterns fail before, especially in an uptrend. We actually did bearish divergence for a while here, and we did pull back for a little bit. You see how, that wasn't really strong though, but we did have that, and we pulled back just a little bit, and then we had a huge move. So that's a little bit concerning for me, because this thing just started to curl back down. It hasn't really rolled over, though. If it does, that's pretty sharp bearish divergence. Though with these little thingies here, it kind of diminished its potency. The true divergence, you will see peak to peak without shenanigans in here. We got these here, so it makes this divergence a little bit less potent, right? So I wouldn't put too much weight in it as like a short, selling signal, but it's a cautionary signal, and because of that, if it does bounce here, potentially that's a good looking high or low. And then if you can make new highs, there's always two ways of doing it. You go long after confirming that high or low after it gets back above, or you anticipate the bounce, you anticipate the high or low, and then you get in a little bit early. There's always a two way of playing it, but you just must understand the sentiment of the market and all of that stuff. So I haven't decided yet where I'm gonna go long, what strategy I'm gonna use, but those two are what I'm looking at. If we were to bounce here, you can go a little bit early and anticipating that bounce, anticipating that higher low, or you wait for a full confirmation that it gets back above this resistance and then go long here. Obviously, if you go long here, you're gonna miss out some of this move, but you get more assurance. So you're paying for that assurance. You know what I mean? So you're gonna pay a little bit more for that assurance. When you go down here, you're gonna pay a little bit cheaper, but there's chance that we might do something like that. So that's something I'm still dealing with here. We did bounce right off of that 38.2% there. Don't worry about the numbers there, but so because of that, I'm a little bit hesitant. Monthly chart, this is a monthly. So this is a monthly stochastic. Keep in mind each candle represent kind of a monthly each month there. So last time we hit that overbought status of monthly, we pull back about 4 months. This is a 4 months. Again, this is monthly, so 4 months of kind of a slightly pulling back. Same thing happened here, about 4 months. Again, 4 months is a long time, right? If you look at it, 4 months is a long time. And I'm not saying that that's what's going to happen, but what if we kind of slightly move sideways about another 2 months here and then kind of do this, right? Also a little bit indication of MACD though. Last time we hit that level, we totally tanked, but I don't see any signal as of today. Is that okay? Isn't that a shooting star? It looks more of a bull pennant. If this candle was up high, like up here like this, then that's more of a shooting star, like this one, right? But this one is kind of lining up, so that's more of a bull pennant, bull flag. Looks more like this right there. I mean, obviously Apple can go much higher, but I'm wondering though if we're gonna kind of move sideways for a little bit or slightly drift lower. So I haven't decided how I'm gonna play this. We might even see something like something like that. I don't know. I definitely like to see that. The worst case scenario, if it comes back down to 100 SMA, doesn't mean I'm gonna buy right at that level, but I want to see how he reacts, and if he can do that, that's a good level. But we may never get there either. But as of today, in the minor term, it's just a bit bearish because we have such a big bearish engulfing pattern, We had follow through. You see what happened at S&P 500? We actually saw green candles. It makes a big difference when you see green candles like this. Because that, what it tells me, as far as a candlestick's concerned, the story is the buyers are trying to slow it down. The buyers are trying to absorb the selling pressure. Right now, that just looks like buyers tried it and then they gave up. Though we are just right at that support here. So if we can bounce from it, then perhaps we can continue higher. But if we lose this level 127 and close well below it, then 50 EMA is the next level, and then 122, and then after that will be 100 SMA. So we've got 3 levels of support here. You know, we got 128, 125.60, 122, 123, 122.90, and then finally, I think the worst case scenario is 119 at 100 SMA. I think that might be. It might even come, you know, 150. The worst case scenario about 115. I don't think it's gonna come any lower than 115 unless Nasdaq and this whole general market indices just start to see a lot of weakness. Then at that point, none of these supports matter. Apple's gonna come down, but it doesn't look like that's as of today. The indices does not look like it's gonna completely roll over. So these are potential level support to look. And so I mean, we got support right here as well, some of these levels. So these are levels. So I mean, this is kind of must protect level, I think. I mean, these right here. For trend to continue, buyers must protect this level, 125, 128. Because any of those levels, vicinity of a high low. Right? So I just thought I'll look at quickly on Twitter. And then we'll look through those other stocks that you guys requested. I was looking at Twitter, and I wanted to go long on Twitter if it would have gapped up on earnings, and it didn't. And now, because of it didn't, we have another lower high. You see? High, lower high, lower high, and that's another lower high. That's not a good look. So now we got this. It's unfortunate. So this, I won't want to be engaged with this at least it gets above 153.24. You know, I mean, I still think Twitter will do well, like long term, maybe even next several years or so. But as far as my entry is concerned, I think it needs to get above 53.38. Then I'll think about it. Until then, it's gonna be pretty hectic here. Let's go to gold and GDX. So I haven't touched gold in a really, really long time. Back in early 2014, I was pretty bullish on gold. I was completely wrong. Lost a lot of my positions on it. Hence, I had a still beat S&P 500 last year, but I had a pretty weak, compared to prior year, I had a pretty weak performance last year because of it. I made a killing on treasury bond all year long, and then just gold and didn't work out for me. And so, didn't work out there. But ever since then, I didn't want to deal with it. One other thing that I pointed out, because I did write an article why I think gold is possibly bottoming, and then I wrote another article recanting from that statement. One of the things, a monthly chart here. This is a monthly, monthly 20 SMA. Okay, monthly. Again, these are monthly picture, monthly candles there per month. You can see how well this thing respects monthly 20 SMA there, right? Respected here, went up. We respected there, trying to get up, pull back, went up, became resistance. It's been acting as support all, for many, many years, for about 2-3 years there. And then we came down, we went up, and then hit as a resistance right at that level, tanked, got up, hit it, tanked. We got up again, hit it, and we are slightly pulling back right now. And I do not want to engage on gold or GDX or anything special metals right now until we get, at least we see this thing's doing this. Not just reclaiming it to the upside, not just we slightly get above that. I want to see monthly 20 SMA rising. And then price action, you know, condoning it. Until then, I would not be part of GDX. But doesn't mean that we don't have potential signals. But the price action is very, very ugly. You have a little bit of a hope here if you are a gold bull. We clear this resistance, but I don't know how long that's gonna stay. I mean, last time we cleared that and we went up for just less than a month and then we tanked. So I mean, now we gotten above this resistance here, and we do have 100 SMA coming right there. We hit that last time, we tanked, so that's another resistance level, and I'm not sure it's gonna do that. Even if it gets all the way up here, that is a very, very prominent channel resistance there. We are in a downtrend, major term lower highs and lower lows. You know, you could look at this as a kind of a higher low potentially, but it's only in potentially intermediate term. But we are still in a downtrend, and so it's unfortunate. Manipulation or whatever, same thing with gold. We did put in equal lows, but the thing about it is we did that last time. And then we got lower high. We keep cultivating lower high. So even if this thing goes up and continue lower high, then yes. So it's not looking so good. Same thing with monthly GLD here. This is a monthly, 20 SMA monthly chart there. And see that acted as support, resistance, and hit that. I need to see this thing getting back up. So it's the monthly chart. So how long is it going to take? Could be a year or 2 years. And then price action doing something like that. It's not too late to go along there on gold. I just have again, this is just my opinion, my feelings. I just have feeling that gold and these metals are not going to do well for another year and year and a half or so, maybe until 2017. I'm not sure. So I mean, with the recent higher low right here, more of a minor to intermediate term, potentially we get up here, but it's very strong resistance right now. You look at, we're in a primary downtrend, but we're still cultivating lower highs. It's just very, very ugly. And so yeah, I don't think that's a good look there. So I stay bearish, primary term, intermediate term, minor term. We got something going as of late. That's about it. If you have a chance, could you please comment on SCHM? I'll look at that as well. But so let's look at J&J. What were you saying about J&J? Let's see. Can you analyze J&J? I am seeing a diamond pattern. What is perspective? What is your perspective? What is its perspective? What is its perspective? Diamond pattern. So is diamond pattern bullish or bearish? If you're still here, if you're still listening, is diamond pattern supposed to be bullish Or is diamond pattern supposed to be bearish? Well, diamond pattern is usually known as topping pattern after uptrend. That's what you're gonna see, a diamond pattern. But I've seen where diamond pattern can rise higher and continue higher and becoming a continuation pattern. I think what's overrated about patterns, especially diamond pattern, and a lot of consolidation patterns like diamond pattern or descending triangle pattern, symmetrical triangle pattern, ascending triangle pattern, symmetrical triangle pattern, all of those patterns, like triangular patterns, diamond is also kind of triangular. Triangular patterns, they are, you can't give them certain direction. You can't. I've seen it happening a lot of ways. What I can tell you though is a lot of triangle patterns, diamond pattern, triangle pattern, if it happens after uptrend, I think there is higher probability that it's going to continue higher, but a lot of times there's a fake out. Like it breaks down for a little bit and then it goes up. Like it happened on Apple before. I remember we had a kind of a symmetrical triangle pattern right here. You know, there's a triangle pattern. We're in an uptrend for sure, right? And then we broke down, and then from that breakdown, look at how fast it went up. A lot of times that's what it does, is that we get these fake outs and then it just continues higher because we're on an uptrend. So what I can say about it is, because we're not in a downtrend per se, because my primary term, we're kind of still in an uptrend, but in the intermediate to minor to intermediate term, we are in a downtrend. Lower high. And it's just how people perceive this. I mean, I really wouldn't call this a diamond pattern. But if it is diamond pattern, it could be something like that. It could still do that. It could still come down, consolidate, and then continue lower. You know what I mean? It could be a kind of a resting pattern. Like this was some kind of a consolidation right here. You know, like this. We initially broke higher and then it did nothing. We came down and then went up. So they never really give you right, you know, nobody can really know which way it's really gonna go. But at this point, as long as this thing stays above, and we do have 100 and 200 SMA crossed, we haven't seen that happening. Look at this. So something changed as far as the sentiment is concerned. Just because they have a death cross right here does not mean that it's going to roll over though. But there's a lot of fear right at this point. A lot of investors and traders are fearing Johnson & Johnson. And if we lose certain level, could be a problem here. But it could be that, you know, we kind of gather momentum, continue higher. But I think nobody would truly know what's going to happen. What I would say is, if you want to go long on Johnson & Johnson, I want to see this thing getting above 103.92, hold above it. If we can do that and we can create higher low in the process, the best way to do it is confirmation, initial confirmation, pull back, full confirmation, and then get up. That would be a good level, some of these levels, to continue or initiate position there. But I want this thing getting above that level. Until then, it's still bearish in the intermediate term. And so I think the diamond pattern here is irrelevant, and I wouldn't put too much weight on it, because diamond pattern is known to be a topping pattern. But in my career, though it wasn't 20 years, but in my career, I really haven't seen that happening a lot. I think on S&P 500 we had something like a diamond pattern before, where, you know, we had a fake breakout and then I don't know if I want to call. I thought I saw one. Was this diamond pattern? No. I thought I saw one sometime. I don't know. I mean, Nope. Maybe not. Maybe I didn't see it. Maybe I saw it somewhere else. This is kind of a diamond. Yeah, it's kind of hard to say. But that's a diamond pattern there, so it's known to be kind of a topping pattern. So diamond pattern is known to be a topping pattern, but if it happens after a downtrend, though, then I would have to say it's more of a bearish signal. But I think the best way to analyze this, instead of trying to put too much weight on the pattern itself, on a price action itself will help. If you can get above that, I think that will give you a better way of trading it. Let's look at HA. This is my first time looking at this stock. I did not track this stock, but I will look at it. It's good. It looks good actually. Let me see. Let me look at my other charts here. So monthly, weekly looks fine. We had this kind of a long road, and then it broke out. We had another consolidation there, broke out again, pull back, which is still a primary term higher low. We created a higher low, so you can see we're starting to create higher lows and higher highs in the intermediate to minor intermediate term here. This was a continuation pattern right here, triangle pattern, and then we broke out. So if we can stay above that, then perhaps we can continue higher. So it looks bullish as of today. We're above all these moving averages. Perhaps if this is a primary term higher low, we can perhaps have similar move. But when you're working with gaps, like especially these big gaps, it gets very hectic from my experience. What I mean by that is, let's say if this thing kind of fills a gap and then it gets hectic here, and then I mean, I'm not saying that's what's gonna happen, but when you're dealing with the big gaps, tends to be like here. There's something similar, not exactly the same, right here, right here. See that? You see that gap? We started cultivating higher low, higher high. We did a little bull flag. We got up. We filled this gap, huge gap, and then it tanked. And I mean, later on, it got back up here though. But it had to make sure everybody who was involved here, make sure they're out, and then the stock moves like crazy. So now you're working with another gap. So when we're working with I mean, if it's a small gap, it's not a big deal. Like this gap right here was a pretty small gap, and then it did react. You see, it got hectic. It did. It pulled back and then got up and then pulled deeper, and then again all the stops are taken out. That's why you cannot place your stop like that. All the stops are taken out right here. Everybody's got out, and then this thing moves without you. We're dealing with a pretty big gap, and especially I just did a little, what do they call that? Back testing here on gaps. It doesn't act so well with gaps. Gap fills are not a good look for this particular stock. I can't find any other gaps. So I would be cautious. If it's a short-term thing, maybe even that's a level to get out or close most of it, the gap fill there. Right. Last one. You are very welcome. Last one is SCHM. What is this? Schwab US Mid Cap ETF. Is it some kind of index, or is it is it a company? It looks very similar to MDY. It looks identical to MDY, but I don't know what. Oh, it is like MDY. Okay. Okay, I see. Was this? Okay. It's a little bit different. Well, actually, that wasn't it. Which one was it? SCHM. So I wonder if they're some kind of a different index, but I don't know a lot about them. But yeah, this is exactly, I mean, this is pretty much bullish. I mean, yeah, we got certain thing going on here. We do have bearish divergence on the daily chart, and this is probably gonna make it hectic, which means, you know, there are buyers going to try to make a run for trying to push up, but there will be some, it's gonna be a bit hectic with this pressure here. Basically, there is a short-term sellers up here, some clandestine sellers, but this is not a signal to be worried about that this whole thing is gonna like crash down or anything like that, but it's gonna be a bit hectic. Right now, we are on that 50 MA. Worst case scenario, we might even come all the way down the 100 SMA right here, which is 100 SMA here, 100 SMA there. It has been acting as support many times, so that this is probably the worst case scenario. The worst that bearish divergence can do is even bring it down to about 41.86, but if you're a long-term trader, position trader, it shouldn't worry you, because if we can come down here, find some bounce, and then continue higher, we'll see much bigger move. Kind of similar to like these moves. We pull back, shake down, and then you got that big move afterwards. Almost like a measure move. If you can measure that move similar to that measure, and then maybe this could have another measure move to the upside as well. But that will be the worst case scenario, in my opinion, to come down to 100 SMA and then kind of retest this level as old resistance, new support. If not, you know, we're just right on that 50 MA right here. So, I mean, if we can bounce from it, we can possibly gap back above that and even nullify the bearish divergence. Not sure. It's like no commission version of MDY by Schwab. No commission version of MDY. Interesting. I gotta check these out. I didn't know about these. So I will look at them. Thank you very much. So any other questions on anything? Any last questions? Any technical questions? Any psychological questions? Anything? PCLN. PCLN. Yeah. PCLN. I was actually looking at PCLN. Short? No. We don't short. I don't short anything in this environment unless you're gonna do a short term. No. Why would you wanna short it here? You do not want to short, especially when we close, when we have higher low. You know, higher low here. I mean, you can look at that as potential double top. But again, potential double top doesn't mean you know, it's gonna actually happen. So here's the thing about it: is recently did clear this resistance. Again, just because I clear resistance does not mean that it must do that. But the good thing about it is this: we have cultivated intermediate. This is what I'm talking about: intermediate term higher low. It's sizable. Pretty sizable, almost a 50% of its move. That's the size of a higher low. Those are the good higher low. So we got higher low. What we need is higher high, potentially get up here. So if we can get up here, that would be higher low, higher high, pull back, old resistance, new support, and then get up. Then maybe somewhere here could be a good level to go long. Short, not above this level. Not above 1139. Not above 1139. Top of the downtrend channel. Right, if we go to line chart here, we are just getting above the channel there. We're getting above that. So we're actually starting to nullify. It doesn't mean it completely nullified it. This actually, to me, does look more bullish to me than bearish. You can see we also have uptrend support there. So again, you want to short this. I'm not above this level. You know, because what could happen is it could come back down. and then let's say it bounces up here, that still can be considered as high or low. Double top is not going to be confirmed until this thing do this. Once they do that, that's confirmation right here, full confirmation. Sometimes it can just go straight dive, but, and so I don't think I would go long here. I don't think I would go short here. I just explained it. Well, I just, I was watching it actually. Not I was watching it, but I considered this, but I thought still got a lot of work to do, so I didn't like it much. But yeah, not too short, not too long. It just gotta wait for that. IMAX. We're getting up here, the resistance level. Definitely not a level to go long. Definitely not a level to short. Why not level to short? We have higher lows and higher highs. Why not level to go long? Because it's extended and it's right at the resistance. So it's definitely a level to observe, but definitely not a level to do anything. Once we cleared this level, this vicinity would have been great entry there. And this would have been, let's say if you got long here, this is a level you close, 50, 70, 80, most of your positions. Maybe you can hold some a little bit and just, if you can ride that. But I definitely don't think this is a level to do anything. Well, let me do some Fibonacci expansion here. Interesting to note that I did Fibonacci here. We got to Fibonacci retracement level, bounced. We got to 138.2%, pull back. So let's use the same analogy here. Bring it up, and we're gonna measure this move. Okay, do you know what I just did? I measured that move, and we got to that. We got some of these Fibonacci retracements. So I'm gonna measure this move. Yeah, something like that, right? So we measured that move, pull back, Fibonacci retracement level. This is what I call FRZ, Fibonacci retracement zone. We got up 138.2%, pull back. We're just hovering right under 161.8% here. So we got a little bit higher than this move. That was actually 138.2% from this level. So from this level, this was 138.2. So we pull back a little bit, we continue higher. So these are some of the level of resistance. Doesn't mean we're gonna have a huge pullback. We could very well continue higher. So this is a level to, if you're holding it, then keep holding it possibly, or just maybe close some, but it's not the level to initiate anything. Because we're getting to the extended level, looking at historical price action, looking at that move, and that move. And looking at the resistance, and looking at the Fibonacci. So we're saying the move might be that it's getting extended, right? Let me just show you the monthly chart right there. So you can see we're getting to that level. It doesn't mean it must roll over. You can see last time we hit that, we consolidated for 2 months. 2 months. So I mean, I don't know if it's gonna consolidate for 2 months or not, or if it's gonna pull back. And last time we hit that, we tanked. I don't think that's gonna happen though. I mean, this probably was the market when the market had that flash crash. Yes. So yeah. Oh, thank you very much, you too, Sherry. And we're done here as well. So let's call it a night. Thank you very much, everyone. You're very, very welcome for coming out and hanging out. We're trying to do these every other week, but like I told you guys before, that we don't need to look at the market like so much. I mean, the market is gonna do what it's gonna do. When I analyze the market, just back here, early March, it's still same today. You're very welcome, everyone. Thank you very much. So, it just really, what I would recommend is that, ignore daily fluctuations, ignore, noise, ignore, all these different signals potentially there, but the respect the price action, and I think if we can do that, then I think you will do well. I think one of the hardest thing for me when I was first got into this is that subduing your emotions, subduing your feelings, overcoming, mastering your fear and greed. You will be fearful and you will be greedy. It's just that's us. That's human being. You will be fearful and you will be greedy. And if you can able to remove that in your practice, then you'll do very, very well. But it's hard to do when you're seeing the numbers jump up and down. And I'll be honest with you. I mean, I'm not perfect. I look at market and then I kind of wish that it will do a certain move and it doesn't. It irritates me. But what it comes down to is, let's say I feel, because I'm a human being too, let's say I feel like, God, what does it do there? What does that mean? I always go back and always tell myself, okay, where are we today? We are in the higher lows and higher highs. We are we are still cultivating high, intermediate term uptrend. In the minor term pulling back, we're still in the vicinity of higher lows, which means we're bullish. There will be ups and downs. So I thought, as I was learning how to trade and mastering technical analysis, like I told you guys before, is that 70% of trading is psychological. So if you master everything about technical trading, you would only master 30%. The skills, the Fibonacci, the patterns, the moving averages, the supports and pivots. If you just completely master that, you only master 30%. Because why? In a heated situations, what happens is everything you've learned, it goes out the window, right? Because now you're emotionally involved, and once you get emotionally involved, it gets very, very, because everything you ever learned, it goes up. Think about it when you're young, even today, you say something, you yell at your friends, your spouse, later on you think about it, oh my God, why did I do that? That's just us, that's who we are. We just get angry, irritated. So I think the best way to do it is just, that's why technical analysis is so beautiful, because we can able to remove all of that and remove all the emotions and just trade the price. And obviously, if you read my recent article, it's a dichotomy of trading, is that you gotta be very sophisticated. You have to be sharp. You gotta be sharp. You gotta know what you're doing. You have to be very, very diligent and disciplined. But at the same time, you have to be playing stupid at times. So that's the beauty about all this. You know what I mean? I look at a basketball. I love playing basketball, though I'm really not good at it, but I love playing basketball. Even there's a basketball where you do have to move fast. You do have to move, power moves, power hops, and when you're rebounding, you gotta make sure when you gotta get your position and rebound that ball. But there's also where you have to be smooth in your release, right? You gotta have that smooth release. In the pressure situation, people are coming out to you, they're gonna just swap that thing, right? But you still have to my biggest thing is every time I get nervous when I'm trying to shoot and there's people running towards me, I'm just like, oh, I'm just, kind of look at trading is kind of like that. There is time where you have to be aggressive. You have to be very, 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 very aggressive, and you have to know what you're doing. But there's times where you just gotta sit back and relax, and you just gotta be playing stupid. We're in an uptrend, so we're just gonna stick with it. You know what I mean? So kind of, that's kind of a dichotomy of trading, and I think I have to say this. I'll let you go with this. Everything you ever learned about trading, you probably have to unlearn a lot of stuff, and then kind of go back, and then you know what I mean. Everything we've heard stuff just some of the stuff people say, in trading, people say stuff like, well, if it hits the support, more times it hits the support, more likely it'll break. I've heard that when I was growing up, or not growing up, but when I first traded. And then remember these things and it becomes that it's true, but it's not true. At least on S&P 500, how many times we hit S&P at 100 SMA in, back in what? In January, December. I tweeted about this, and back in March and, April. So then that statement may be true, maybe was true, but it's not true now. You know what I mean? So we kind of have to understand that there's certain things people say and do, and we just kind of take it like it's true. But what I try to do is, well, I want to first test and see if it really is true, instead of just hearing it and then just realizing it is true, or taking it or accepting it as true. It's not just technical analysis. If you look at it, it's about everything about life, everything about fate, everything about God, everything about anything. You hear stuff when you're growing up, but as I was I became more wise in I'm still, growing up and learning, but I became more wise in life. I don't want to just hear things from people and accept it as true. I want to find out for myself what it means to have a healthy life, what it means to be faithful, what it means to be, what it means to be righteous, and all of that stuff. So I think really though, we're all seeking the truth, aren't we? You, me, everyone in this earth, everyone, human beings, we're trying to find the truth. But the biggest question is, what is the truth? And nobody can go that road with you. Only you can go. Only you can help yourself. Your parents might help you, your friends might help you, but really nobody cares your life like you do. So I say, take that endeavor, take that journey to find that truth. If you're young, stop partying away. Like, stop drinking around, stop sleeping around, stop messing around, seriously. I mean, I used to do that. I'm not judging you, because I was that person. In my 20s, that's all I did. But I think around like late 20s, 27, I started thinking about my life. I started thinking to myself, man, if I keep drinking, doing all kinds of stupid things, sleeping around, where's my life gonna be? I can't start doing, I gotta stop doing this. And I think biggest misconception about media is you can live crazy and then you can be, somehow, some things will happen to you and then things will be great. That's not gonna happen. If you don't do anything about it, right, none of it is not going to turn out good. It's going to be same, right? They say definition of insanity is doing the same thing over and over again and hoping the different result. Everybody knows that, but nobody knows how to apply it. And so what I could say is there has to be time. I mean, if you're young, if you're late 20s, maybe even early 30s, even like, because if you're much older than me, I'm not trying to tell you how to live a life, but it's not too late. It's not too late to go back and study things and trying to figure out what is the truth, and so in today though, things is crazy, right? More and more people talk about religion, more and more people talk about God, more and more people talk about what it means to have peace, what it means to have a happy life, all of that stuff. Stop listening to all these people. You find out for yourself. You want to be Buddhist? Go to Buddha temple, read Buddha Bible, whatever you need to do. Go pray to Buddha. See if he shows up. If you're a Christian, stop listening to preachers, pastors. You find out for yourself reading your Bible. That's exactly what I did. If you're, Muslim, do the same. It's just, I can't. There's so many people don't know what they're doing and they're telling things. Don't even listen to me about technical analysis. It worked for me, doesn't mean it's going to work for you. Really, that's what I'm saying. It doesn't mean it's going to work for you. That's why I tell all my subscribers that even if you follow me, I cannot guarantee that you're going to make money, because you might not have stomach for what I'm trying to do. You may not. I'm not going to come here and tell you, if you subscribe to my services, I'll make you a millionaire. You know how people do that in infomercials? Come to my webinar, come to my seminar, you know, weekend, I'll make you rich. Overnight, I'll make you 20 grand. That's BS. That's not gonna happen. Maybe 1% out of 100%, maybe. You know this. Those people are wanting your money. Somehow they wanna, you know, take advantage of you. So I wanna be, you know, I try to be real as real as I can be. And this life of trader, investor, you know, is a brutal world. You will not master this overnight. It will take you minimum 5 years. It took me 5 years. Maybe you're smarter than I, so maybe it'll take you 3 years. Even then, it wasn't that I made good money. There's so many things to learn about trading. It's not just technical knowledge. There's a lot about money management. You know, if you're playing options, which options to use, how long to hold, and all of that stuff. How do you portion it? It's just, it takes years to learn. And so find out for yourself. Don't listen to anybody. Find out for yourself. I feel like I'm always preaching to these things, and I feel bad. I'm not trying to judge you. I'm not trying to tell you how to live your life, but I thought maybe I could help with a few things. But anyway, have a good night, guys. Thank you very much for kind words. If I can do you know, live video update again, then I'll let you guys know. If not, I'll try to post a video. Oh, this Friday, if you are interested, I am doing a webinar for people who is thinking about possibly, you know, signing up for a premium membership for Traders Club. And you don't have to sign up. You can just come and hear it. Just let you know how our methodology work, and you know what I do for the members and stuff like that. It's this Friday. You can sign up at TWTRadersClub.com. There is a link there to sign up for it. So feel free to come to that. You know, and then I'll tell you guys how things work and how my strategy and method. You know, when I look at setups, what are the things I do, what are the things that I provide for you as a member, and stuff like that I'll do. So this Friday, 1 hour before market open, or 1 hour before market close. So that's when we'll do that. So if you want to come out to that, feel free to sign up, and we'll talk more about that. Anyway, so I'm gonna go. Have a good night.
Your line is now muted.